Tether just did the unthinkable. They're launching a fully regulated US stablecoin.
Welcome back, folks. Time to catch up with the market on SoSoValue Crypto Daily. All right, let's dive right into the numbers, and what a day it's been. The total cryptocurrency market cap is up a solid 1.83%, pushing us to a whopping $4.18 trillion. The big players are making moves, with Bitcoin climbing a steady 0.3% to hit $116,000. But the real star of the show today is Ethereum, absolutely ripping with a 4.3% jump to $4,700. And can we get a round of applause for Binance Coin? BNB just smashed through and set a new all-time high with a 2.4% gain. You love to see it. It seems the risk appetite is back because the meme coin sector is leading the charge with over 6% in gains. The degens are feeling frisky. Now for our top story, and this one is a bombshell. Tether, the company behind USDT, is making a massive, and I mean massive, move into the US regulatory spotlight. They've just announced a brand new stablecoin called USAT. So what's the big deal? This isn't your typical Tether launch. USAT is designed from the ground up to play nice with US regulations. Get this, they're using Anchorage Digital, a federally regulated crypto bank, as the issuer. The reserves will be held by Cantor Fitzgerald, and for the CEO, they've brought in Bo Hines, the former executive director of the White House Crypto Council. Wow. Tether is putting on a suit and tie, folks. Their CEO, Paolo Arduino, said this is all about ensuring the US dollar stays dominant in the digital age. This could be a game changer for getting corporations and big money institutions comfortable with using a Tether product. May not direct related, but today's Circle stock price dropped 6%. But as one giant enters the regulated ring, the stablecoin wars are getting messy elsewhere. The bid to issue the USDH stablecoin is heating up, and it's getting controversial. According to validator voting data, a group called Native Markets has locked up over 70% of the consensus. Hasib, the managing partner at Dragonfly, didn't mince words, calling the whole thing a farce. It seems like the community wanted more established players like Athena, Paxos, or Agora, but the validator votes went a different way. The situation got so weird that Athena actually pulled out of the race, citing concerns about the Native Markets team identity. This really pulls back the curtain on how these decisions can be super opaque and maybe driven by backroom deals. And while that drama unfolds, don't sleep on Circle, the company behind USDC. They're making moves, reportedly buying up 80,000 Hype tokens for $4.6 million and testing USDC on the Hyper EVM mainnet. All signs point to a native USDC launch on that network very soon. The stablecoin battle royal is officially on. Speaking of explosive growth, let's talk about Pump.Fun's Pump token. To the moon! Seriously, this token has been on an absolute tear since its listings on Upbit and Binance. The platform has raked in about $50 million in revenue over the last month, and here's the kicker, they've been using most of it to buy back their own tokens directly from the market. This has pushed the price right back near its record highs. The numbers are just wild. Trading volumes are 8 times higher than they were this summer, while their competitor, Let's Bonk, has seen its volume collapse by 99%. This is tokenomics 101, people. Pump.Fun has already bought back 6.15% of the circulating supply in less than 30 days. The market float, meaning the tokens available to trade, is down to just 33%. And with the next token unlock not happening until mid-2026, we are looking at a serious potential supply squeeze. Keep your eyes on this one. Finally, let's end on some more big institutional news. Polymarket, the on-chain prediction market, is raising a new funding round that could value the company at $3 billion, with some investors reportedly eyeing a valuation as high as $10 billion. This comes just 3 months after a round led by Peter Thiel's Founders Fund. But the biggest news here is that on September 3rd, Polymarket received a no-action letter from the CFTC. So what does that mean? It means they have the official green light to re-enter the US market. This is a massive win! To top it off, they're integrating Chainlink's Oracle infrastructure to provide verifiable data and automate how markets are settled. In simple terms, it makes the whole platform more transparent and trustworthy. No funny business. It's another huge step forward for the entire industry. That's a wrap for today's update. Catch you tomorrow, same time, same place.